Hello. Good morning, everybody. How you doing, huh? Hey, it's a Monday, and you're still alive. It's the best Monday ever. Hey, you ready to do some currency trading? Yeah, who would have known, huh, Ryan? Hey, Ryan, did you catch the South African trade balance data I posted there? Yeah, negative 18 billion. Imported 11 billion worth of stuff, but exported 19. Suppose that's good, right? Cool. Well, without further ado, it's Monday, the 29th of February. Technically, it's still February. You can still get some good trades in, make some pips, and prop up your return for the month. Remember, that goes in your trade data and your trading history and your fact sheets. Still time to have a good month. I have a feeling the market wants to move today. Everyone wants to look good by the end of the month, right? So it's 7:30 in the morning. It means it's time to get going. Let's get this done. Good day, Miriam. Welcome to the Cool Kids Club. Welcome to Forex.Today, everybody. It's another good day to make some pips. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. You know what? We're missing. Yeah, we'll do it later. An ECN that gives you access to the foreign exchange market. Yeah, we do it quickly. I've tested it. The results are actually pretty good. Very good, in fact. We do it cheaply. We do it without drama. That's what you want. But we're more than an invisible silent partner, because I'm here to bring you confidence, teach you skills, and keep you going, keep you focused, and maybe even make you smile at the throughout the day. That's what I'm here for. To make it all good, fun, and hopefully rewarding. We do these sessions at 7:30 in the morning, Monday through Thursday, and then every Friday at fxstreet.com. So again, welcome to Forex.Today. Nice to have you. You know what? I just can't keep going without the disclaimer. Sorry, tradition. Let me remind you that trading is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Taking a look at the markets here, just a quick gander. I'm going to start in the bottom here. Okay, gap down on Nikkei today. Euro stocks came down. Okay, these are 4-hour charts. DAX came down, and the FTSE came down. Now, on these 4-hour charts, what should we be looking for? Is there support here? You notice on the Nikkei, that's an M2. If you're a bull, that's a buy. Okay? Because you're thinking M2 to M4. Euro stock market, central pivot point. Okay, so a bull would be looking at this. Okay, that's not very bullish, but the higher high is bullish, isn't it? Holy smokes. So maybe, so traditionally, if we were hanging together in Asia, what I'd be telling you is this area between the M2 and the central pivot point. I'm trying to highlight it in yellow, but that's kind of hard to see. I don't have any really other choices, but I think you can see that. This area in there is the typical buy zone for a bull. So this is just an aggressive move out of the Euro zone. Once again, if you're a bull already on the German stock market, This is the buy zone. There's the weekly central. This is the M2. So if you're a bull, what you're thinking is pachow. Okay? And then most aggressive out of them all, right? Higher high relative to that high. And we're kicking off the 4-hour 21 daily or weekly central pivot point. I think there's a monthly central pivot point in there. The M2, just kind of need to cycle this up. Okay, so it doesn't tell you if it's going to go up, but if you want it to go up, that's exactly where you would like to see it go up. It's interesting, right? Okay, S&P 500, look at sitting on its weekly monthly pivot cluster. Sorry, that's the Dow Jones Industrial Average weekly monthly pivot cluster. S&P 500 weekly monthly pivot cluster. Okay, gold came down to M2. And oil, okay, previous high, new high, buy the dip. Look at the pivot cluster. If you're a villager on Minecraft. Interesting stuff, right? Like if you were a bull, I don't know if you're a bull, but if you were a bull on some of these things, holy smokes, it's got your attention. Okay? We don't know if that's going to happen, but if you're a bull, and like I said, one of the things I like to think about on Mondays is if I bought it today, could I hold it till Thursday? Yeah, Ryan's threading the string of pearls here. Yeah, wouldn't that be neat if it was a good day today? What if it was risk on today? Well, I was kind of alluding to it. How many mutual funds and hedge funds and whatnot, money managers, how many of them want to end the month poorly? So somebody might be saying, "Holy smokes! If I need a 1% move today." Right? So just food for thought, whatever. Okay, but there is interesting support there if you happen to look for it. Now, you see the fallacy with this though is confirmation bias. If you're a bear, you're probably not looking at it that way. Right? And a bull might be looking at that way, see it, it might not exist, but you would say, "Oh, look at that. That fits my point of view just perfectly." But we know the vast majority of, people potentially in the room, I'm not saying it's you, but end up just staring at it doing nothing one way or the other, right? So I don't know. I think you can understand its confirmation bias, and I'd rather you say, I'm a bull, that looks good to me, and then you drop into a smaller time frame because that's like, 4 hours. Drop into smaller time frames, put smaller trade plans together, but decide, like I was just saying, if I bought this today, can I hold it till Thursday? Right? And then maybe you do things like buy at the cluster of the weekly and monthly central pivot point after a higher high that closed at the weekly projected target. That's within the realm of possibilities, right? So that's why I want you to get in. Expand my chart for. Come on. All right. Yeah, that's not a live chart. We'll come back to that to VCB. Okay. Okay. All right. So I'm just kind of we're aligning the satellites first, okay, and then we'll dive deeper. Okay. All right. So January industrial production out of Japan, biggest increase since 2015. Well, a year, right? First rise in 3 months. Yeah. So, anyways, when you're on your hands and knees praying, begging, this is a relief, I suppose, right? Japanese retail sales only negative 0.1, negative 1.1. How do you do this again, right? So how'd you do today? Negative 0.1 in sales. It's funny, obviously because it's month over month, but it's still funny how you can have not just no sales, but negative sales. I guess maybe it's people returning stuff, right? Yeah, put the sweater on. It sucks. Give me my money back. All right, well, we've lost some sales today. So anyway, it's not good, right, for one of the largest economies in the world. Year over year, pretty flat, but still a negative number. Come on, Japan, get your act together. Right? Maybe because they're jacking up taxes. Silly Japanese. Australian operating profit, blah, blah, blah. This caught my eye because it's the biggest decline in 6 quarters. So that can't be good, right? Kiwi building permits, negative 8.2 versus 2.3. Wow. That doesn't sound good to me either, right? And then, do you remember this G20 meeting? Japan or China's like, yeah, we're not going to devalue our currency. 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 And then Monday morning, boom, we weaken, we weaken the band. But I love it. I mean, whatever. It's no big deal. And this is the Asian session. We know something else has happened today, right? But I just love it though, right? Oh yeah, we're not. Yeah, no. Boom. Weaken it. But it's not really. I mean, I don't make a big deal of it. I just think it's funny, so I put it up there. Right, 5 in a row. If you were hanging with me 100 million years ago, not 100 million years ago, 2 weeks ago, 2.5 weeks ago, I said when the yuan got down to 6.47 that it would go up, and it went up. It came down, and I think it didn't hit 4.7. I think it hit 4.8. And then it went to 6.5, 6.51, 6.5.2, 6.53, and now we went through 6.54. Now we're at 6.55. It's weakening. Let me count. I'm looking at the other chart here, but for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 days. Of the 13 days, 2 days were tiny. Tried to get stronger for like a little bit, but not really. So, woo. Very nice. Very nice. Okay, boom. European session. I don't think the G20 really did much, right? If anything, though, at least they got in a room and they talked. I think they had some pretty interesting conversations. But like most G20 meetings, well, how about this? 10 years ago, when it was the G7, and then it was G8, and then there was a G something plus 1 or 2. It was funny because I used to make jokes at how they just get together and, we drink, we smoke, we go dancing, we have some pretty girls, we talk about the finance, and like nothing really happened, right? I'm like, wow, I want to go to a G7 meeting in Paris, all expenses paid, 5-star hotels. Well, yeah, we talk finance, woohoo! Yeah, come on, Grandma Yellen, get off the table. Put some clothes on for crying out loud. I don't, but I think this meeting was actually probably the only interesting meeting that's happened in I don't know, 100 years. But, there's some serious questions going around the table, and these are finance ministers at the G20 meeting, and guess what? Every one of their central banks said, you guys are losers, you stupid finance ministers. We've been carrying the ball this whole time, and we've done almost everything we possibly can, and because you're not doing your job, stupid finance ministers, that you're the ones that dragging down the economy, and we've done everything we can. So man up, do whatever. So now they're sitting around like, gee whiz, we might have to actually do something. Right? Wow, things are bad. We might actually have to make a decision. And of course, 20 people from different countries that have different points of views and have different types of, skin in the game and different outcomes that they would like to see. What are they going to agree on? Have you ever seen OPEC agree on anything? Yeah, we'll cut production. Go ahead, Saudi Arabia, pull back on production. Jack up oil prices for me because I'm going to pump oil anyways, right? Even when they agree, they're lying to each other, right? Yeah. Like what? Seriously, do you think Saudi Arabia should cut back and then Iran's going to cut back? Iran needs the money. Like, holy smokes, they're finally in the game again. And they're going to cut production? Cut production. We're going to jack up production to 1,000%. Now, how about Russia? They're fighting two wars. What? They're going to stop doing the only thing they make money at? Pumping oil? Yeah, right. Good luck with that, right? They're not even OPEC, so OPEC can't even do it. So, whatever. In Venezuela, 700% inflation, and you think they're going to cut back on oil production? Well, imagine 20 finance ministers that have been primed and educated on doing nothing. Get 20 of them to agree on doing something radical to save the world, right? Yeah, good luck with that. Who's the chairman of the meeting? Geithner? So anyways, so guess what? They didn't really do anything. No coordinated action. The funny thing is, they went in knowing that they needed to do some sort of coordinated action. So what do? No coordinated action. All right. What's the result of that? What's the result of that? German 10-year bond, 0.12% yield. We have a negative yield curve all the way to the nines, man. 30-day, 1 year, 2 year, 3 year, 4 year, 5 year, 6 year, 7 year, 8 year, 9 year, all negative interest rates. Whoa. Hey, is anyone buying bonds? Holy smokes, huh? What does that say? Yeah, maybe we could have used some coordinated action. Lagarde, Christine Lagarde. By the way, side note here, isn't it amazing that we have 3 unbelievably powerful women running, a big part of our global economy right now? Right? I mean, the Philippines have had women in charge for a long time. That's nothing new there. But we've gone like most of history without really women allowed to even say what they think, right? And all of a sudden you have Angela Merkel running the biggest, the second or third biggest economy in the world. She's basically like Chancellor of Europe, right? Holy smokes. Christine Lagarde running the IMF, right? And Grandma Yellen running the Fed. Like, what an amazing time in history. Right? Pretty cool. Pretty cool. I think that's neat. All right. So, anyways, getting to the, I skipped one here. Let me go back. But sorry. Lagarde stated that she saw renewed sense of urgency and willingness to, yeah. What she was trying to say is this sucked. G20 losers. Right? Yeah, and then here comes President Hillary. Oh my gosh. Wouldn't that be interesting? Right? Wouldn't that be interesting? All right. So, anyways, the Bank of China cuts are by 50 basis points, and that just happened recently. That's why I put it sort of in here. Okay. Is that a big deal? Well, as you may know, the last time the United States adjusted their RRR was 1992. That's a long time ago, friends. Long time ago. You know, the RRR cut by 50 basis points is actually quite a bit. That's a big cut in the RRR. What is the reserve requirement ratio in the United States of America? %10. 1, 2, you rock. Ibrahim, oh, if you don't know this stuff, guys, holy smokes. Holy smokes. You are, you, how, let's say kindergarten, you join and start looking at Forex. First and second grade, you're learning some technical analysis. Yeah, this might be like fifth grade stuff, but if you need to graduate, you need, holy smokes. Yeah, you got it. We've just discovered something that you need to master. You need to know stuff like this and what it means and how it does and what does that mean to money supply, monetary, how does monetary policy affect money supply? How does money supply affect other things? And, because this is what central bankers do. But anyways, okay. So now that China has radically cut the RRR again by a whole 50 basis points. Think of it. We're 10%. So cutting 0.5% would be a lot for us, right? It'd be devastating if the United States did that. What is the new reserve requirement ratio in China after they've radically cut this RRR over and over and over again the last 2 or 3 years? Yeah. Hey, good job, Ryan. Yeah, 17%. It's funny, huh? They've cut it like 25 times in the last few years, and it's still 17%. Yeah. Interesting, right? It's just to put everything into perspective. How does it stem risk? Well, depends on what risk you're talking about and measuring. But the idea is that allows banks to make more loans. More loans get used to buy things or build things. So like companies don't spend, companies invest. So you go to a bank now and you can borrow money to, I don't know, build another empty factory, for example, or go to a bank and build another empty apartment building, right? Go to the bank, I don't know, borrow money and put it in the stock market. Yeah, so there's no such thing as over leveraged. All right. So next, just moving along here, Eurozone. I thought this stood out. How do you think the ECB feels about negative 0.2 CPI? Yeah. I mean, is it even CPI when it's negative? Right? It's one of those things. Once again, how could you have negative inflation? I mean, that's not supposed to be a negative number, right? So, how about in 2 weeks, Draghi starts talking about additional quantitative easing. Is he going to do it? No. Last meeting, he said they talked about talking about it at this meeting. Well, let me tell you about that. They are going to talk about it and do nothing. They might even all agree that it's critical they do something soon before the economy falls off the face of the earth, and then they will defer. And what I've been saying is maybe June, but possibly October. I know it's so ridiculous to think, right? But let me tell you, I've been let down by central banks in the past, and in particular the ECB. I've joked about it before, and I'll joke about it again. They can shock you with how long they can defer action. No matter how bad things are, they can wait. And I'll remember the collapse of the euro versus the USD. Okay, we had euro USD kind of doing this, and then the Fed tapered, and you started to get strong dollar. Then we came up again, and we came to an ECB meeting, right? And all of a sudden it tanked here. I remember this, right? I was making good money, and then they were supposed to do quantitative easing, and no, they didn't do quantitative easing. It came all the way back up, and then boom, they finally did quantitative easing, and we dropped from 140 to to almost parity. But the difference here would have been, where's my mouse? Wow, hello mouse. Can anybody see my mouse? Oh, here it is in this monitor. All right. They thought it might happen in this meeting or this meeting, and it happened there. So, we're talking like February, April, June probably was the difference. So, anyways, don't be shocked if they wait for you to completely give up hope, and then they do it. Okay, just don't be shocked. Yeah, there's an interesting thing there, right, Oren? There's no bonds to buy. But whatever. Kate, what's on for today? Baltic Dry Index. All right, fine. Canadian current account, fine. Chicago PMI, yeah, all right, fine. Pending home sales. Well, we're already on a pretty decent path and trend, but January, people don't buy houses in January, so I don't know what to expect out of that. Probably none of this is probably that big of a mover. Okay, so it'll just be money flow based on trades. I have a feeling lots of people need to squeeze some trades in today. Make some money, make some quick money. Okay, that's what I think is probably going to happen today in the market. Fund managers and such need to make some quick money. And then tomorrow, you'll have rebalancing, right? So wealth managers, right, will then need to start rebalancing portfolios and all that kind of stuff. So whatever. And then in Asia, you like Asia? I love trading Asia. I love it. Asia's great. Love trading Asia. Um, why? Why do you think? Because see, when people say that, I say, okay, you just don't know how to trade Asia. That's it. I love Asia. Asia's great. Now, does it trade like London? No. Does it trade like New York? Well, New York doesn't trade like London. So why would New York trade like Asia? Yeah, no, I love it. Tell us how. Well, I'm pretty sure if you go on YouTube, you'll find I've done entire videos on them, 1 hour presentations. I remember, I think I was in Pasadena. You know where they film Hollywood Week in, not The Boys. What's the other one? American Idol. Yeah, that place. I remember standing on the stage there doing a presentation on how to trade Asia. So, anyways, and then China manufacturing, another good one. Yeah, that's called the Asia fade, right, Denise? No, don't make look. Don't simplify things too much, guys. Like, don't oversimplify what I mean. Yeah. So, anyways, yeah, Asia's great. Trust me on that. So, Without further ado, here's what I think we should do. I'll play the happy music. Then we can look at the calendar for the week, look at our risk events. We can look at the commitment of traders report. We haven't done that in a while. And then we can wrap things up with technical analysis. What do you stink? Smell like a plan? Dun, dun, dun. Forex.Today. All right. So you should see my charts and Forex.Today. Is that correct? Coolio. Alrighty then. Let's go, and I guess we'll start with the calendar. Hello, hello, hello. I am going to do 3 stars only. Let's see if we can find any interesting thing to trade this week. I keep losing my mouse, man. Okay. Let's see. Anything interesting going on? Well, like I already pointed out, some Chinese industrial data. Do you think that'll be interesting? And I just missed this, I guess, for some reason on the slide. Sorry about that. So, yeah, so any industrial information out of China is good. Okay. RBA, interest rate decision, and statement, more importantly, the statement, right? So that's going to be very, very good. Here, let me close this. Okay, so Paching, and when I do this, this means it's tradable. PMI data out of the UK, I don't know. Yeah, maybe. Okay, then GDP out of Canada. Tomorrow's going to be a busy day. That'll be good. ISM manufacturing. Yeah, what I've been teaching over the years is it's played an important role to, measure trickle-down economics. But we are a service industry, so, the bigger news will be ISM services around the corner. And which one is this? It's so hard to see. Okay, yeah, Southern Cross is down there, and the Southern Star. All right. GDP out of Aussie. That's going to be a good one. Wednesday, another dump prediction. That's scalpable too. That's at 8:15 as well, so that's something we could easily do in our session. Okay. Well, Artem says there's 94% chance of RBA no change. Yeah, but it's the statement that you want. Okay, you want to read the statement, guys. Okay, because we know now what's likely to happen. What we're more interested in is the future. Okay, ISM manufacturing, pachow, that's a good one. And then non-farm payrolls. Great trading week. So a lot of Aussie this week. Okay. So if we can get a theme like not as bad as it could be, that could be very positive. That I would say that's one big theme. And then of course, at the end of the week, there's going to be a lot of USD stuff. Once again, I think what we'll see is not as bad as the TV people up there. Not as bad as they say. In fact, oh look, actually that's Warren Buffett, and actually what he's saying today is, this is a good time. So he's not a naysayer. Oh, looks like it's frozen though. Oh, so anyways, yeah, I think we're gonna have a pretty good trading week. All of that's good. An RBA decision, that's good. I mean, just nice where it's not overcrowded. It's the beginning of the month. We get some trades in, and then it's just the deck is stacked nice and evenly throughout the week. Where sometimes what you could get is, Monday and Tuesday is huge. Wednesday and Thursday is really quiet because of non-farm payrolls on Friday, and then you get non-farm payrolls, and it's all over the place. No, the deck is stacked really nice this week. I think we're just going to have a nice trading week. It just feels really good to me. So bravo to that, right? Okay. Commitment of Traders report. We haven't done this in a while. I'm going to have a sip of coffee. By the way, I booked my plane ticket to Shenzhen. Yeah, only 24 hours each way. Oh, no. Only 24 hours each way. Yeah. Yep. So let me tell you, the food better be good when I get there. But I'm now gold level at the Ritz-Carlton, which is nice. You have to stay 50 times in a year or something. So, anyways, that's good. Yeah, typical American, right? I'll go to China and have sweet and sour pork and fortune cookies, and they're like, we don't even know what that is. All right, let's get serious here. All right, euro. No, I'm going to Dubai. I'm going to shift my Dubai thing to May. But yeah, I'll go to Dubai in May for Indian food. All right. What are we going to do? Euro. What do you see here? What's the trend over the last couple of weeks? Okay. Less people buying, but at the same time, less people short. So just nothing's really quite happening yet. Okay. In the futures market, one thing is, I think when we get to certain levels, I'm wondering if central banks get involved and just move the market. Euro's too strong, knock it down. Euro's too weak, pop it up. They want to keep it between, I don't know, 112 and 105. But as far as trading volume, the story here is these are the amount of people short, or volume, if you will. The volume of people short is pretty steadily decreased. If it pops back up, game on. Okay. But I have no problem knocking Euro USD down when it gets, above 110. more like I showed up there 112. We were up there just recently, right? 111.11. I think we had a short. So game on, right? And if you use your oscillators, if you look at the daily oscillator, it's pretty obvious with the Euro USD as well. So, but less people trading it, right? So how about this? This line here, that's people buying Euro. Basically, no change, right? Going back a very long time. And then we had 2 weeks of people buying Euro. To contrast that, there was a time recently where this is the Euro USD moving up like almost 1,000 pips. And what I was teaching you was no one was buying it. Do you guys remember that whole period of time? Nobody bought it, but it rose. And that was the huge decline. That was knocking bears out. And those bears have not got back in. These are big institutional shorts versus, our little day trades and stuff. But it's interesting, right? That look where the peak happened, right on that spike. And we're heading down again, yet those institutional bears are not there. Pig. Okay. It's pretty interesting. I would expect that rising. You know? And yet look how dramatically it's been falling. Amazing, right? Yeah, well, maybe it's not the futures market, because remember, this is based on futures market. Who is it? Is it central banks? Is it day traders? Yeah, but it's happening, right? It's pretty clear, right? And there has been an increase in short positions, right? You can see we were here, and this is going in this direction. Maybe not aggressively, but when that started going up, this started coming down. The red line is actual price of pound dollar. So there's a bit going on there, and no one seems to be fighting them. Because at that time, if I were to highlight, this is the buyers. Okay? So there's less buyers, there are more sellers. Price did come down. It's just not as dramatic as you would think, right? So maybe central banks selling pound or day traders selling pound because, these are positions in the market longer than a week. All right, well, interesting stuff. Or maybe it's just people buying the US dollar. Excuse me, and has nothing to do with the pound. And that's probably somewhat true as well. Okay, they're not selling pound, they're buying dollar. Yen yen. Okay. Let's do the history here. Let me clear this. Let's do the history of people buying yen. Basically this gray line. Okay? And then it's funny, huh? Like a clown. That's people buying Japanese yen. For the first time in a very long time. And what you see here in red is the USD yen. So maybe some of those people that used to sell euro and used to sell pound have gotten out of those markets completely and are just buying yen now. Yeah, well, Usman says, retail traders are going crazy on yen. Well, they always have gone crazy on yen. Whether they're buying it or selling it doesn't really matter. And short positions have come down dramatically from about the same time buyers came in the market, sellers got out of the market. And that's really part of the problem where the sellers waited for a very, very long time. So like, let's do some contrast, right? Like I said here, this is the trend in buying. And let me highlight now the sellers. Okay. See, when you're doing this kind of stuff, and of course you can trend line this, but this was a lot of people short Japanese yen, and they kind of gave up hope after a while, right? They just kind of maybe gave up. Just warm out, right? You can't, but also the funny thing about that is uh, there was just too many people in the trade. A lot of people just late. They're just being silly. Years late, in fact. And then it just became crowded houses. Everyone was figuring it out, but they were figuring it out 3 years late, which is pretty typical. So it needs to come down. That's all. Aussie, more buyers, less sellers. Whoa, oh. But we've been generally moving sideways around 70. This is sort of the 70 area. We're getting close to a year now. So if we can get, a sustained net. So this black line is net, and this is the zero line. And you see for the first time in a long time, there are more buyers than sellers. It's interesting. Keep in mind, this is where we were making hundreds of pips on the buying the Aussie. So, you know, maybe something good. And makes me think of how negative interest rates drives people out of the old safe havens, which is the design of this. And instead of buying something like a risky asset, they just buy gold, right? And if gold, I think gold is up, what, 15% for the year? Australia is one of the largest producers of gold, but that doesn't matter. What matters is how much their gold exports impact their GDP. So let's say the United States produces a lot more gold than Australia, but it might only affect US GDP by like 0.0025% or something, right? But for Australia, it might be 2% of Australian GDP, right? And you're like, so a small move is going to have a bigger impact on Australia, and and so, anyways, maybe get something like that. Who knows? But that correlation goes back a long time. In fact, if you were trading with me, let's say 10 years ago, 8, 9, 10 years ago, I used to have a chart, a profile. Back then, it was on the Dealbook 360, and they were called workspaces. And I had a workspace that was labeled gold, so I'd click on it and it'd bring up my charts on gold, but it was the Aussie dollar. I don't think they're running a trade deficit yet, Usman, but that's something that you should be watching. So, anyways, that's what I'm thinking of. Just old school is just assume Aussie dollar is gold. Well, they've been running a surplus. Sorry, the other way around. Sorry, I'm thinking backwards. Yes, they have a trade deficit, so yeah, things are bad, right? Yeah, but they should be going the other way. But let's say they don't sell much gold, this, but the gold they do sell, they're getting 17% more money for than the past. So I don't know, right? So it's something. Gold is up, and so is the Aussie dollar. What can I say? And that is the historic, old school, right? Historic, old school correlation. So pay attention to that. Kiwi, 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 can't you see? All right. So see this? Sellers are flat, buyers are rising, net change moving closer to neutrality. Okay? People are buying the Kiwi. Not a majority, but there's no new sellers in the market. Okay? The convergence could be important. And finally, kitty cat. Okay. This is USD CAD going up. This is USD CAD coming down. The market was heavily short CAD. They're kind of just moving back to neutrality. The orange line here, which I'll do now in blue, are the shorts getting taken out of the market or exiting the market. And nobody's buying. The bears just are walking away. So in a situation like this, what if the bears come back? Okay. Well, so the thing is, will the bears come back if oil stays above 25? If it stays above 30? Well, let me tell you something. One of the things I did over the weekend, and yeah, I actually did this. I went back through oil prices going back to the 1890s. No, I'm sorry, 1850s. I looked at oil prices 1850 year after year after year after year after year. I studied them and the movements of oil and what made oil prices change based on history. Things like, how about the Civil War and the naval blockade of whaling ships, so that whale oil used for lamps, the supply was cut off, and suddenly there was a huge demand for rock oil-based kerosene, and prices went up. Can I share you the results? Well, I wrote a paper. See, remember I asked you guys to like pick one currency, any currency, do some research, write a college paper. I do that every week. So I wrote a Harvard study on the history of oil prices and what makes it move. And, you know, I'm just a little bit smarter this week than I was last week. Just a little bit. But over time, it adds up. Usman says to take, yeah, no, I did it just year by year. and overlapped it. You know, how did World War One affect it? What about the boom years of the 20s? How did World War Two affect oil prices? Right? When oil was discovered in East Texas, what happened to oil prices? So on and so forth. All right. So, anyways, I just want you to make those investments. That's what I did all Saturday instead of playing with my children, which is a terrible thing, right? Instead of playing with my children, I studied the 200 years of oil prices and tried to figure out why. Why did that happen? Why did oil prices drop here versus before and after? Well, what years were those? What was happening in the world? Let's go check it out. No, that's private. Because, here's the thing why I'm required to bang these things out, right? There's like just write a paper, write a paper, write a paper, read all this stuff, write a paper, write a paper, write a paper, write a paper. Like, my gosh, this is like an English class, right? It's like a literature class. Write, 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 write. It's not necessarily my thoughts on world history. I'm not writing a thesis like this is the thoughts and soul of Wayne McDonell. I'm just banging out a paper to get it done with, right? You know what I mean? Just try to get through life alive, right? So, anyways, all right. So let's do some technical analysis. What would you like me to cover? Oz. Good answer, by the way. No, not Kiwi. Beast. No, you're not even thinking about the calendar. We went through it. What are the important currencies? Aussie in the beginning of the week, USD at the end of the week. That's why we do the calendar, guys. Trading what you traded last week might not be the right thing this week. Okay? So, my thought process right away is we have this, and then lots of sideways, and maybe, just maybe, stabilization in commodity prices, and therefore upside target of about here. And most likely moving forward, what I'd like to see is kind of like up, down, and then up. But this next up, like I'm kind of saying here up until June, down and maybe up in September. What do you think? So this is Mar, up Mar, oops, down June, up Sep. And what I'd like to see here is this stay overbought for a while. How about an Aussie yen? Do you really want to hurt me? Do you really want to make me cry? Whoa, 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 whoa. You guys remember last week, this discussion of the 21? Oops, I wanted to circle it. The 21, right? The 21, the retest of 21. Remember, I got out, right? I shorted here to hedge my long position. I shorted here to hedge my long position. I cashed out here, right? So I'm feeling all right about the decision. But that's where I was long. I wonder if I can get in again. So we started the week at M3. If that remains the top of the week, which happens to be the 21, what's our target? M1? That puts us here. Oh, snap. Maybe, just maybe, we'll play it like a triple bottom. What do you guys think? Is that within a realm of possibilities? Of reasonable possibilities? Well, if that happens, if it drops down to that area, then I'll look for the opportunity to take the shot. Whether it happens or not, I don't know. Right? A lot of junk in here. You see the cluster of monthly support, weekly M2. So if I zoom in a little more, and we'll do this by going into an hourly. If you were a bull, you buy here, right? That's what bulls do, by the way. Where do bulls buy? Somewhere between the weekly central and the weekly M2. That is the buy zone. So a bull, using the methodology out of my book, the standard operating procedure of the last 100 years, you buy the 5/8 cross up. Hua? Spike, retracement off the big pivot. Right? And that could be the birth of a new trend. Maybe. Right? Maybe. So that kills the other idea. And what that suggests is then, up, down, up, and a change of direction there, change of trend there. So there's two plausibilities of a bull, right? So if I'm a bull here, oops, I hate that. Don't click that button. If you're a bull, the two areas, or your two trade plans, remember how I asked you always have two areas in which you might be interested in buying? My two areas would be this area here and this area here. Okay? This is kind of like a maybe because of the psych level, because of the pivot point. You get this kind of consolidation going on. So really, I got three areas in which I'll consider buying. Okay? So it could do this, or it could do this, or it could do this. Sure, Ryan, but now you have fundamentals right on top of your technicals. Now remember, if you're a bull, this should have been your interest way up here at the beginning of trading. You could say, oh, whoa, hey now, if I can get this to come down, it might be an interesting place to buy, right? So now you could say, not only is this an interesting place to buy, but now you also have the China data. Okay. You could say there's a fundamental reason, right? If cutting the RRR helps the Chinese economy, do you think the Chinese economy might help the Australian economy? Okay, and look at the trade plan here, which we already have. Okay, we've been watching this now since February. Is the idea, right? Right? But do you guys forget charts like this? This is where you need to print the chart and put it on your wall. Because you might get caught up in all of this stuff, right? Right? You're caught up in all of this and all you see is trees. So buy the dip at 80 maybe? Yeah, Ryan, that's just slow. So you have to have some anticipation, right? So you have to use leading indicators like a pivot point and trend and fundamentals. And you say, well, the 21 is still below the 55. So the market's still bearish, but it's going to go bullish. What's going to turn first? The 5/8 is going to turn first, well before your 21. Now, in particular on this chart, you see, well, actually, hang on. I got it. One click out here. The angle and separation of the 21.55 here is very bearish, and you're very aggressively bearish, in particular off the 21 like that, right? And then this retracement to the 55 kills the 21, and the 55 is supposed to come down and double bottom. Well, we didn't get that, right? So look at, it's not just the 21.55 and what side is the 21 on. It's the angle and separation between the 21.55. So very bearish here. What's going on with the 21.55 in this area? Nothing. It's dead. There is no 21.55. You could delete them from the chart. They're worthless. There's, okay, the 21.55 and the angle and separation between the 21.55 tells you the direction and speed of the market. But there's no market. The market's dead. There is no market. There's only price. That's called a range trade, right? So in that case, what you're doing is you're selling the 5/8, you're buying the 5/8. You're selling the 5/8, you're buying the 5/8. That kind of stuff. Okay? And the support and resistance has actually gotten closer, right? So we're actually playing it off 80 on the bottom, 83 or 82 really now on the top. 82 is about there. And we're just stuck in a 200 pip range, but there's no market. That's why you don't even use the 21.55 anymore. There's no market. There's only price going up and down, up and down. And that's where you use your oscillators. So the challenge I would give you, Ryan, is take a screenshot of this chart and see if you can draw a MACD, if it wasn't here. Right? So your MACD is measuring the angle and separation between the 21.55 for you. And it hasn't done anything. right? If you were a bear, that could have been a good sell. If you were a bull, this could have been a good buy. And everything else is just nonsense. It's just dead. Just dead. Market's dead. No market. Okay. And with that, I'm going to call it a day. I love you, babe, but I got to jump. So goodbye to you. Happy trading day. I think we're going to have some good trades. Whoop, whoop, whoop. Let's make lots of money. So peace on earth. May the pips be with you. May your profits be above average. Thank you for being a client of TradersWay.com. And if you're not, for shame on you, at least go to TradersWay.com and open a demo account. Show some loyalty and respect, huh? Come on. Your mother would be disappointed. All right, cool. And thank you. I'll put a copy of the video on Forex.Today shortly. See you tomorrow. And the next day, and the next day, and the next day. I'm always here for you. Never forget that. Bye-bye.